commodities, any asset in general that you want me to go through from a technical perspective and fundamental perspective. So we are just 5 minutes away from the durable goods, okay? So that might explain a bit this slight dodginess in dollar in the very, very short term, in the 30 minutes chart and etc. After finding some support since yesterday night from the 108 lows. Remember that yesterday we had a pretty weak PMI data, spreading the fear of a recession in the U.S. manufacturing, industry, and service sector, something that pushed the dollar lower. And I should show you also the charts. Here it is. This is the dollar after it drifted yesterday at 108, found support and recover more than 80% of yesterday's losses. This is the 30 minutes chart dollar index. Okay, so as I was saying, we are just 4 minutes away from the durable goods. So what is expected for today is let me just check my calendar as well. Okay, just give me a second, and to keep an eye on the chat as well. Chop, welcome, Chop from Jamaica. I guess that's a JA, Jamaica. Welcome. Where's my calendar? Here it is. Okay, HFM calendar and the economic calendar. As we keep saying, you should have a look on your calendar every morning. So durables are pretty much expected to show slowdown in July, significant slowdown. So will they come better than expected? Will they indeed confirm the slowdown? Let's wait and see. So definitely another weak reading from the US economy for a second day in a row, after seeing the weak PMIs, after seeing the new home sales diving by 12.6%, rising mortgage rates, decline in affordability as well, something that could add a renewed pressure on dollar once again. Okay, so what else? Until the data are out, let me brief you up. Okay, yes, we have seen just earlier the mortgage rates again. So we had another. It's let me just double check. So the U.S. mortgage rate gains over the last 2 weeks revised much of the decline over the last nearly nine weeks. So there's still, we can see that there is some ongoing pressure on the housing sector in the United States, on the housing starts, on the pending houses, on the existing home sale figures, and etc. So there is a drop and an additional decline, which leaves the mortgage rate down to 2015 territory. Okay, so 7 years ago, 7 years lows. But yeah, what is the key event of the day is definitely durable goods, and let's not forget that we are just ahead of Jackson Hole. So Jackson Hole starts tomorrow. So there is an overall cautious sentiment trading ahead of the Jackson Hole symposium that it will actually last for 3 days. So you might not be familiar with Jackson Hole symposium, but it's a gathering of all the major central bankers. So you can understand that it will give us indications of the future path of monetary policy in the US. So that's why it's so important. And we're going to see, I think, on Friday, Mr. Powell is also speaking. So that was what dominates the market this week, the Jackson Hole, the anticipation of the Jackson Hole, along with the data, obviously. So Okay, the data. We need another minute to go. Let me check the chat as well. Hello, everyone. Hello. Not Espanol, I'm afraid, unless if you if you join the Facebook um, if you use Facebook, in which our analyst, our Alto, our Spanish-speaking analyst, provides every week some live analysis via Facebook, dear Hector. Okay. Good evening from Vietnam. Okay, so data should be out, and they are out. I'm not sure. Let's zoom in on dollar over here. So, guys, what we are, okay, so durable goods, the overall, the durable goods order missed expectations. So, even though there are risks, there is a slight bit of expectations if we exclude the transportation and the defense numbers. So it seems that defense, excluding transportation and defense, provides some kind of a rise. However, the excluding aircraft, not defense capital goods orders, excluding aircrafts, also slightly higher, excluding defense, also higher, excluding transportation, also higher, but it looks that the overall measure missed. So it's a bit of a mixed release over here, but what that clearly shows is the impact of the high prices in energy. Okay, once again, the high prices of energy is something that is a clear it has clearly impact durable goods over here. So let me just see, just check the find the breakdown of this report as well. So just give me a second. So you see a bit of indecision for the time being on the dollar. As I said, it looks to be a bit of a more mixed report. So, okay. Non-defense. Yeah. Okay. So actually, it's not something that could change, or that could change the Fed's aggressive approach. So, and it's not really it is a disappointing over already. However, it's just clearly presents the impact from the prices, from the higher prices and the higher inflation and etc. So that's why I've seen this indecision over here. Okay, indecision, as on the breakdown we have seen that the parts of these components of this report have beat the estimates. Let me just have just a quick search. Okay. The Ishak is okay. Let's. Oh, a lot of you are actually interested on Dow Jones. So yes, of course. Let's see how we're just an hour away of the U.S. market open. So there's plenty of time until the U.S. market open, but for so far today, we have seen the US majors correcting, having a pullback, as you can see. Okay, here we are. Okay, so extending, let's say, the drift that we've seen in the last 1, 2, 3, 4, 5 days in a row, finding a bit of a support. So let me put the white chart on, okay, because I think it's the one that you prefer. Right, here we are. So that's the daily. Okay, let's start with the daily time frame. You can see that there was a significant drift since last week on the in the stock market in general, and more precisely on the U.S. Majors. Okay, so that has stabilized a bit today, with Dow Jones over here finding a floor at 32,747. If I zoom in into the daily chart, you can see that there is a bit of a lack of momentum over here. That looks to be like a limited support to the Dow Jones. Small body candles. The intraday Bollinger has already flattened, indicating that it's actually the asset that's actually consolidating. However, as you can see from the momentum indicator, MACD over here, RSI as well, and the flattening of the stochastic is they all actually indicate that there is an ongoing bearish pressure, and that looks to be that slight support, that slight, how can I say it, appreciation today looks to be just a bit of a correction for the asset. Okay, so the the turn, this sharp pullback that the whole held for 5 days in a row hasn't run out of steam, according to the technicals, at least, with the asset holding below in the negative Bollinger Band area. MACD decreasing, RSI turning below 50, and the body of these candles implying that there is still some selling pressure. However, okay, let me just put the channel on. Should be good. Okay, as you can see, in the long term, as long as the asset doesn't exit, okay, our up channel, an up channel that has been since the mid of June, okay, as long as he held within this channel, the long-term bias, okay, the medium-term bias holds positive. So a breakdown of this trend line, okay, this floor over here, is the one that it could, in the long term, open the doors down to year's bottom. Okay, that's just for you to be aware in the long term. For the time being, as I already said, intraday, it has it looks that it ran out of steam. This appreciation that we have seen since this morning, since overnight to be more precise, looks to run out of steam, with the asset failing to extend gains, and actually we can see over here the indicators, or at least the stochastic and RSI, pointing again to the downside. So, and some decline, lower peaks over here, stochastic, suggesting that the bullish bias is running out of steam over here. So, however, as I said, we have less than an hour until the US Open. But let me get back to the dollar. Okay, should be okay. Just give me a second. There's my dollar index over here. So held above the 108.70, sustains the gains that we have seen so far today, and that looks quite reasonable for the time being, considering that the majority of the components of durable goods have beat expectations. I mean, if we just check the breakdown of the report, check the shipments, the ex transportation, the ex defense, the not defense capital goods, they all beat expectations. So that is something that it looks that it has provided, he has held at least the dollar again above the that immediate support, that immediate floor at 108.70. Sorry. Uh, okay. So as I can see from my newsfeed over here, the unfilled orders are currently at 1.12 trillion. However, what is key is that they are keep rising for 23 months in a row. So they are they have they are actually posting some a nice appreciation. However, they're still well below the pre-pandemic level. So, but either way, it seems that the factories are working properly and they are quite busy regardless of this of all these obstacles that we are facing in the global economy. So intraday, that's the 30 minutes chart, guys, and I would like to zoom in a bit and see some analysis. So my latest fractal, my completed latest fractal over here stands at 108.90 territory, and it's ready to break it. Okay, and at the same time we have seen that the fast moving average are start rising and pointing higher. RSI the same, is at 64, pointing higher, and there is still some room to the upside. MACD also rising, so and it just broke it. So it looks that we are seeing some refreshed bullish bias, considering the breakdown of this my nearest resistance area, and the fact that all my indicators in this 30 minutes chart start rising. So the next resistance level for the dollar is back to yesterday's highs. Okay, so that stands at the 109.17 was the peak yesterday, and we're not the asset is not far away from it. Bollinges are expanding, and yeah, that's the next nearest key resistance area for dollar index. Let's see the daily chart as well, so you can see that. Okay, I'm gonna clear it a bit. This a lot of lines over here. As you can see, regardless of the of yesterday's week data, dollar managed to held um, at 20 years. Sorry, let me just be precise. Yeah, 20 years high. So regardless of yesterday's um, and performance, it's still holding at this historical highs. So an extension, a breakdown of this of July's resistance of July's peak, actually of this month's peak, as I said, at 109.17, could open the doors to new highs. And if we use our Fibonacci extensions, okay, let's use that as well. So on this latest leg, using that a significant breakout, decisive breakout of the latest peak of 109.17 could open the doors to 110 territory. 110 and 110.30 more precisely is the 123.9 Fibonacci extension. So that was for dollar. Overall, in a bullish outlook, intraday again has turned in bullish outlook. So in the near term and long term, it looks well supported and in an overall positive outlook, as I already mentioned. So let me just check the chart again, see whether there are any questions that I might have missed. Yes, I did. So, seeing Dow Jones. someone asked about Nasdaq. It was Debo. So let's check Nasdaq as well. Let me find my Nasdaq. Here we are. Okay, Nasdaq. So pretty similar with a performance. Pretty similar performance, I should say, with the Dow Jones. So that's the 30 minutes chart. Let's start with an intraday setup. So let me just fix my template over here. Set my intraday setup. Here we are. Fast moving averages. So we have another 15 minutes to go until this candle closes. But if at the top of the hour, if at the top of the hour close significantly bearish, that would be, my dear friends, a near-term evening star formation, which is a bearish format. Okay, so you've seen that it failed to extend. We have a pretty, not a precise, a doji, a pin bar actually. That's a pin bar, and then a turn sharply lower, reversing the gains of the last hour, extending below all my moving average over here, all except the 20 period one. So the 20 period one actually is the one that it will provide the next support level. But yeah, we need to be a bit patient when until this candle closes before we make any assumptions or yeah, and before any assumptions. But let me just zoom in the 15 minutes chart. So if I put the 15 minutes chart on, you can see that failed to break, failed to extend down, 1, 2 candles lower, now has turned into the lower Bollinger Band territory. So yeah, the 12,000. Let's okay. So the bottom of the, okay, that's that area over here. So you can see that's okay. This area, so the 12,870 and to 72 is the next floor. If we see the Nasdaq actually closing below the 12,900. So, and why did I mention 12,900? So I mentioned 12,900 because it will imply to an instant formation. It will clearly show a full reversal of these candles gains over here and a turn and an increasing bearish bias. So stochastic points lower, but we don't have a confirmed bearish cross yet. MACD close to zero, so pretty much neutral. RSI turned at 50, hasn't break below it yet, so still something to that we should wait. Yeah, but we need to be a bit patient on this one in order to see whether it will actually turn downwards or not. Overall, however, as I mentioned earlier with Dow Jones, that's a daily chart, guys, just for those that are interested in the daily chart, there was a quite decisive correction the last few days that with a decisive pullback of the asset the uh, down to the 12,890 territory, 900, we should say. Okay, if you closely seen this line, can you see this line? This used to be a nice resistance level back in May and June, and now has turned into our immediate support level. So for the upcoming days, if this pullback, if this down down move, down leg, extends, turning below that level that used to be a support and now has a resistance, now has turned to support. If we see an extension lower, that could open the doors down to 12,000 lows, or even the year's bottom. But for the time being, we cannot really see something confirm, at least to confirm something like that. Uh, it has already reversed more than 30% of 2 months, more than 2 months, nearly 3 months gains. Okay, you can see that's a 30 minutes reversal, 30% reversal of 3 months gains. So adding to the bearish scenario for Nasdaq, but that is a key support level. So we need to monitor this area over here. Okay, so and a move, a break of the 12,675, which represents, actually it's a confluence of, can you see that? It's this floor over here, the 12,675, is a confluence of the lower Bollinger Band, my 38.2 Fibonacci level, and my latest up fractal as well. So this is a key level to be watched as well, because this will a break of it could open the doors to 12,000 lows, as I said. So here, and even the year's bottom. That's in the medium term. That's something that you will monitor in the upcoming days. For the time being, yeah, we have a decisive putback. We need to be patient until that candle closes. So please, with the news, just mom, please, the news. I have covered the news, dear Emmanuel. I'm not sure whether you joined late or whether you heard me or not, but what we had seen from the news is that the components of the durable goods, actually nearly all the components beat expectations, so they have been interpreted as quite positive for the dollar, and that's why dollar over here held some gains, because if we check the breakdown, we can see that shipments were higher and unfilled orders also rose for 23 consecutive months. Ex-transportation durable goods also beat expectations. The ex-defense ones also beat expectations. So capital goods as well, the same, beat expectations. So slightly better than expected. This is what I mean. So considering the breakdown, it has provided some near-term floor to the dollar. So yeah, that has helped dollar to sustain the day's gains for the time being, and to help hold the move above the 108.70, as I already mentioned earlier. Yeah, but don't forget that we have Jackson Hole. Okay, so we might see cautious ahead of the very first day of Jackson Hole, which is tomorrow. So to the upside, dollar and yesterday, for the dollar, yesterday's peak remains the next resistance level. Gold. Can you please talk about? Of course, of course, of course. So let's shift to gold. So gold turned actually away from its latest peak in the 1800 handle. Okay, remember this is a very, very important level, psychological level, 1800, double zero level. And a key resistance for gold. So gold is far away from it, is far below from it after 1, 2, 3, 4, 5, 6 consecutive down bearish days. It held on yesterday's data, week data. It held actually. It bounced slightly from the week's bottom, but remains overall under pressure, considering that we consider the fundamentals affecting the gold. So remember that the markets are still actually still not driving, yeah, driving we could say, or keep an eye, monitor the global growth outlook, right? So and the monetary policy. So the fact that we are expecting from all the central banks, not only from the FOMC, to keep at least for September, to keep this tightening, the hike, to proceed with another 50 points of rate hikes. This is something that holds the bullion under pressure, along also with due to the strong dollar as well. So key floor, okay, key support for the dollar for the time being remains Monday's bottom at the 17th. Let me just be precise over here. 1726 territory, okay. That remains the next immediate support level, but we can see in this daily picture that the asset remains under pressure, so it's well below all its moving average at the bottom territory, at the lower territory of the Bollinger Bands, with MACD negative, RSI holding below 50, and more precisely at 43. Okay, so it's under pressure, and that is quite reasonable, as I said, from fundamental perspective. Okay, so that's that that is over here. Okay, 1726 is the current support level for the asset, and as you can see, I will go down to the 1 hour chart right now. We have seen the asset retesting twice the 1750 territory. So this 1750 mark, it looks it looks that it is a strong resistance level for the asset that fell consecutive for the whole week to with the gold actually failing to break above it, and actually it looks to be a nice reversal point for gold. So I'm gonna put that in as well. Okay, so the reason why I'm putting these trend lines on is because after that slight appreciation of gold yesterday, we have seen the asset moving sideways, okay, entering a ranging market ahead of the Jackson Hole. So these two lines, the top and the bottom, the latest low territory and the latest high territory are the immediate support and resistance level for gold intraday, because we have seen gold bouncing between 1742 and 1753 territory since yesterday morning. So these are the barriers of this latest range in which the gold has entered. So only if the asset exits this range, this area, either to the downside or to the upside, we could see some intraday direction for the gold. So in the case that it bounced higher, breaking this double top over here at 1753, then the next resistance level intraday, of course, it's at the 200 period moving average and the 1758 level, so $3 higher. If the asset actually extend declines, breaking the bottom line, then we could see a retest of week's bottom in the 1730 territory. Okay, so that's intraday. What else? What else? What else? That was for gold. Let me know if you need anything else. Gold has been selling good profits. Okay, good for you, dear Zim. Yeah, for the timing is flat. It has flattened, moves sideways. So yeah, a lot of indecision intraday. But yeah, I already mentioned the ranging conditions that is currently facing. Yeah. So guys, this is your session, so keep adding your comments. And I missed, oh my god, I missed Michael. And you've been here for ages, right? So yeah, euro yen, of course. um now, now you mentioned yen, and yen is actually is the strongest currency for the day, along with dollar. So yen and dollar and Swiss, dollar, yen, and Swiss have been the stronger currencies so far today, while the pound and Kiwi are the two weakest ones. So let's see euro yen. Euro yen, euro yen, euro yen, euro yen. Do I have it somewhere here? Never mind, I'm gonna drag and drop it. So euro yen and dollar yen. Okay, let's start with euro yen. That's the hourly chart, my dear Michael. So extending declines, a bit of a bounce on the last hour, but as you can see, it remains it's keep posting lower highs, right, lower peaks. So currently it's at 135.87 territory, but the overall, not overall, actually the technical picture remains negative. So MACD extends declines. RSI, even though it tried to appreciate a bit, it failed to break 50 territory, and it has flattened. So that looks to be a temporary bounce, at least as long as we don't see a consecutive bullish candle. Okay, so I'm gonna turn into the 30 minutes chart, and I'm gonna set my intraday setup as well to see what's going on over here. And yeah, that looks to be just a limited bounce the last 30 minutes. In the last 30 minutes, might be just some bits ahead of the data release, but you can see MACD is holding well up below zero, so very, very negatively configured. RSI is at 50, but it's flattened, okay, implying that this bounce looks a bit limited. Stochastic is the only one that it keeps pointing higher, but the slope is not sufficient. It's a bit not flat, it's a bit narrow. So I'm gonna connect my highs over here. Okay. No, that's not helpful. So okay, 136 level, it's somewhere, let me just be precise, and it's here, somewhere here. Okay, so that's the next resistance area. Okay, but it's quite early to tell because this formation over here, this candle is still open. We don't have a confirmation of a bullish cross of the fast moving average. Okay, so we will need to wait a bit until this is confirmed, because we've seen a crossing, but not, it hasn't closed yet. It's still on. So But these mixed technical indicators, as I said, the fact that MACD is very, very negatively configured. RSI still, it retests 50 territory, but it's a bit neutral, it's a bit flat. And the consecutive and this overall downtrend in which the euro yen has seen since last week, and actually it was Friday. Since Friday, they for the time being they suggest that this is a limited bounce. Okay, so resistance 136, and the very next one is our latest up fractal at 136.18. Okay, so that's the next resistance area. If the asset remains provide some further boost. Okay, but overall it remains under pressure. So at it tests 136.18, it could end up with a reversal back lower again. So if I just, okay, that's the daily chart. Okay, just give me a second. Sorry. Okay, so someone wants something, but on the right hand side, perfect extension. So we have, looks to be like a descending head and shoulders. I'm not sure whether you have seen that before, but look at that. I haven't formed it properly. So one, let's see together. Draw. Can I draw? No, I want fill it. Yes, I want to fill it. Yeah, this way. One, two, and another fractal. Okay, might not be a complete shoulder or something, but look at that. Let me just help you with it. Let me help you to see it like I see it. One over here. One over here. Can you see that, guys? So lower low, but suddenly a higher low. Okay. So, okay, here we are. It's not confirmed yet, okay? It's just for you to keep an eye on these kind of formations, because it will help us in the future if, of course, it triggers it. So this could act as a neckline of this descending head and shoulder, or potential descending head and shoulder. It has not been confirmed, but as I said, this neckline over here is a key resistance area. And in the near future, if the asset manage to, at some point, to break above it and top at 139 territory, to enter actually the 139 territory, then the whole outlook for euro yen might change. But for the time being, you can see that any corrections that we had for the whole summer, they looked limited. It was just corrections before another resumption of this downtrend that has been seen in the third quarter of the year. Okay, so in the long term, the next resistance area lies on the round 138 territory. Okay, that's in the medium term, sorry, over here, and on the confluence of August bottom and the low Bollinger Band, and that is at around 135 territory. I'm going to put it precisely. So in the medium and long term, you should keep an eye on 138 as a key resistance area and 135 as a key support level. Okay. 137 retest, the retest over 135, or even a breakdown of 135 could imply to the continuation of this drift that we have seen for 1, 2, 3 months in a row. Okay. Intraday, yeah, okay, it broken. That's good. Okay, it's bounce, is moving up, retesting the 50 period moving average over here. Fast moving averages are rising, just a breath away from this latest up fractal. So we have some near term bounce, but as I said, overall looks limited. So okay, here we are. The next level to be resistance level to be watched 136.20 and 136.37. Okay, euro yen should be pretty much the same. So there is an inverse. Yeah, there is an inverse of yen. It used to be one of the strongest, and now it has turned one of the weakest currencies of the day. So to returning the gains that we have seen. So that's dollar yen, and just broken the yesterday's actually just broken the latest peak at 137. So just broken the 137 level and keeps rising. So that bring, and the fast moving average I keep pointing higher, sharply higher. MACD turned positive in this 30 minutes chart, even though the signal line is still lower. Another bullish cross of the stochastic just now, RSI 66 and rising. So dollar yen in this 30 minutes chart, it has turned positive with the next resistance level at the, let me just put some Fibonacci's just to help us. Yeah. Okay. And the next resistance area for dollar yen is around 30 pips higher, 137.40 and 137.50 should be somewhere. Yeah, 137.48. Okay, that's the area to be seen over here. Here we are. Because can you see that it has broken this immediate resistance that we have seen since yesterday afternoon, extended gains, and is outside the Bollinger Bands area, above it to be more precise, okay? And that opened the floor to the 137.40 territory, which looks to be our next immediate resistance level for dollar yen as the momentum, as the negative bias decreases. So bulls are taking the control of dollar yen intraday, actually in this 30 minutes chart. Stochastic again turns up higher, RSI the same. So yeah, a lot of bullish bias in the very, very short time frame over here. Okay. Dollar cat, yes, of course. I'm gonna get back to gold there, Dragon, don't worry. Dollar cat. Okay. Here we are. And yeah, here we are. So dollar cat retesting once again, return to 130 territory. Is a triple zero number, a very, very important level to be closely watched, because for the whole July and August, the asset hasn't managed to hold any gains above it. Okay, you see that? Attempt number, actually, let me zoom out. This is a daily chart. Okay, April, flirting with the 130 but turned back down. Once again in the mid of June, the same. Once again in the beginning of July, same, back down. So these and more precisely the 131 territory, it tends to be for the dollar cat a very strong and important resistance level in the long term. However, we have seen the asset in a long in the long term in an overall and you see that, let me just, okay, this is the daily chart. Okay, I'm trying to clarify a few things. So the dollar cat has for more than a year now, it has been seen in an up channel. Okay, in an up channel, while since last week, and more precisely since last Wednesday, okay, it has entered the upper area of this long-term channel, okay, breaking the 50 and 20-day moving average and extending gains up to 130.80, which we have a kind of 130.60, which we have a kind of a twisted top. Okay, actually it's not, no, I shouldn't say that. It's not, it doesn't have the same body, so it is not a twisted top, but is a definitely a double top over here. The fact that he held gains, okay, he held gains, he holds in the upper, holds above the, in the upper territory of this long-term channel, okay, uh, uh, holds the in the long term the asset in a overall positive outlook. So here we are. So one. The day's bottom is at 129.48. So as you can see, it's sustaining the nearly 2 weeks gains, halting floor over here, bounce again higher, and that 130.60. So yesterday's and Monday's peak remains the upside handle for the asset. But overall, if we just check the technicals, just to forget a bit on the fundamentals, just to keep a bit the fundamentals aside, we can see that Bollinger's expanding northwards. Can you see that? That's the daily chart. The asset, as I said, is in the upper area of our up channel. MACD is positive, and signal line is also ready to cross higher as well. RSI, it holds above 54. Let me just be precise. Above 50. Where is my 50 territory? It's held above 50. Something happened? Oh, a question on Facebook. Okay. It's holding above 50 since for 1, 2, 3, 4, 5, 6, 7 days in a row. Okay. And keep pointing higher. So the dollar cat remains supported. Okay. At least in the medium term. Intraday now, you can see this appreciation. You can see that it recovered nearly 50%, maybe more, of yesterday's losses. Yes, indeed. So it's actually retesting this retracement level at 130.12. But let's see over here. Down. It looks a bit okay. We have another 11 minutes until the US opens. So I guess the US Open will clarify whether this move will be sustained. MACD is at zero. Stochastic is in the overbought territory. RSI is at 58, but a bit flattened. So there is not. This is a mixed technical picture for dollar cut in the 1 hour chart. We need to keep an eye on the open, because if it found further bid breaking um, this 130.12 territory, this latest peak and the 61.8 Fibonacci level, then it could indicate a return back to Monday's top and the 130.60 territory. Okay, so we need to keep an eye on that. Let me just use my intraday setup as well. Yeah, so well supported for the time being, but we need to see a breakout of this level. Okay, fast moving average pointing higher, so they are in agreement with the with the rising MACD lines, but the RSI is a bit flat and Stochastic is already overbought, so that puts a bit of a question mark whether this will sustain, this rise will sustain or not. So we need to wait until the US is open, or at least so that 30 minutes candle will close, I guess, um, suggesting whether this is this will be proven as a retracement level or not. Yeah. So Stochastic slowing down a bit, but the slope is not sharp, so that might be a bit of a correction before it makes another attempt to the upside. So keep an eye on 130.12 territory. So So, hashtag, okay. What is driving dollar now? Because I place a sell trade on dollar yen. Okay, let's get back to dollar yen then. The dollar is actually strong, and it has been strong since yesterday. Since overnight, not yesterday. After it bottomed on the week data, as I explained earlier, this is dollar index. Okay, after it bottomed at 108, it recovered the majority of its gains, of its losses since of its yesterday's gains. So the dollar is on beat, even though so it's holding very very close to the 109 territory. So, and considering the fact that durables weren't as bad as feared, actually they came a bit better than expected. This is providing some support to the dollar, my dear hashtag. That is the reason why the dollar yen found some support as well. So it's on the move higher for dollar. So one thing is the bit of durable goods, and on the flip side is also the fact that the markets are really anticipate the Jackson Hole. Okay, so dollar yen. Let's not forget the dollar yen is considered to be as a risk sensitive asset, actually a safe haven. Okay, so this might be also one of the reasons why the dollar yen is moving a bit higher ahead of Jackson Hole tomorrow. As I mentioned, someone asked right now what we should to help you understand the significance of Jackson Hole meeting. Okay, so Jackson Hole meeting, okay, is a meeting that is being held once in a year, if I'm not mistaken. It's an annual symposium, as we call it. So once in a year, and I mean, it's always at the end of August, if I remember properly. Okay, so it's a forum for central bankers and policymakers, and in general, all the members of the central banks. Okay, so it's very, very important because it will give us indications of the long-term monetary policy of the Fed for the rest of the year, for the upcoming years. And we're going to have a speech from Mr. Powell on Friday, if I'm not mistaken, as well. So that's why it's so important. Remember that the markets have been driving the last, if not the last 2 years, the last year at least, if you prefer, it was driven mainly by the fear of inflation, of the rising inflation, okay? Also geopolitics on top, but mainly, if I can say, from the central bank's speeches and actions, whether they tighten or not, whether they flip from ultra accommodative to super aggressive, and so on and so forth. So anything, any event such as the Jackson Hole one, any event that provides signals, hints, indications about the future actions of the central banks is significant. Um, yeah. So that's why we have seen a bit of a cautiousness on the sentiment for the whole week, is because we are waiting for the Jackson Hole to start, and the very first day is tomorrow. So any headlines coming from Jackson Hole um, um, will dominate the market for tomorrow, Friday, and Saturday, which is the very last day of the Jackson Hole. Um, uh, yeah, turning back to the to hashtag who asked about dollar yen. So as you can see in this 30 minutes chart, there was since yesterday night an increasing bullish bias, so a decreasing bearish bias. Can you see that the MACD started moving closer to to zero, closest to zero, posting some higher bottoms. This suggests that the bears are losing the control, my dear hashtag. So I'm not sure what you have seen, what triggered your attention, and you enter in a short position. I don't know which time frame you're trading either. I guess I don't know what you have seen, to be honest, because even though if I put a 5 minutes chart, it's still yeah. I'm not sure what you have seen, but it has been it has been supported for the last 4 hours in a row, and since this bottom yesterday afternoon. So obviously the 137 round number, a repeated peak. So that is remains a key resistance level, considering that is our latest peak, which coincides with the upper Bollinger Band level in this 1 hour chart, and is also a level that, if it breaks, it will imply to the rejection of the 61.8 Fibonacci level. And you know this is the one of the strongest Fibonacci levels. Okay, so if at the top of the hour, the we've seen this kind of a decisive bullish 1 hour candle, then the next level to be seen is on yesterday's high territory, and the 137.40 territory, to be more precise. Okay, so let me just yeah, okay, perfect. I'm using some Fibonacci extension just to show you, in case that you are a 30-minute trader or 15-minute trader, to show you immediate resistance levels. Okay. So, what else? Anything else, dear Samuel, in regards to Jackson Hole? Let me know. Gold again from Dragon. Let's return back to gold. Uh, yeah, I did mention earlier. I'm not sure whether Pendragon you have been here, but I mentioned that it has entered. The gold has entered. This is a 30 minutes chart, by the way. I mentioned that since yesterday morning, since yesterday midday, actually at the mid of the day, it has entered some ranging conditions, so bouncing between 1742 territory up to 1753. So can you see? Up, quickly reverse, retest the find some support at the 50 period moving average, up again, an evening star formation over here, a very nice evening star formation again at the 1753 that opened the doors to the bottom of the range at the 1740 territory, and now is consolidating for 1, 2, 3, 4, 5, 6 consecutive sessions, so nearly 3 hours, at the close to the bottom of this short-term range. Only break of this level, the 1742, could turn the attention back to week's bottom and the 1730 territory. You ask something about 1700s. Okay, from fundamentals perspective, okay, and considering that for September, we keep seeing that there's still a lot of chances for, no, that actually is a pretty much, it's a bit certain that the Fed will proceed to further rate hikes. Whether that would be a 50 or 75, that is the question. So, considering, however, that they will keep increasing rates, that will add further pressure um, on gold. So, the 1700s, yes, is something that uh, uh, is actually a long-term support level, and if if we see gold at the end of the week getting back to the 1720 territory, so this support area that I have drawn earlier, that could imply to a potential retest of the 1700s, my dear Dragon. Okay, so spin to the downside, below all moving averages, MACD is negative, and if I just use, and it has been below the 20-week moving average for, let me just measure, for 16 weeks in a row. So overall, the outlook, either from fundamental perspective or or technical perspective, the outlook for gold is negative. Okay, so 1700s is the next support level in the medium term um, for gold. Especially if you zoom in and check the weekly chart, you can see that last week we had a full body bearish candle with no tails either to the upside or to the downside, and that is something that triggered a lot of selling pressure. Okay, so can you see that? So very strong, decisive bearish candle. The fact that there are no tails either to the upside or to the downside suggests that sellers are in control. Okay. Um, Euro Oz. Euro Oz. Euro Oz. Where is the Euro Oz? Okay, before I go to the Euro Oz, obviously, I cannot really reply, dear Michael, whether you're right or wrong. What I can say is that this is a 30 minutes chart euro yen, okay? What I can say is that MACD is still negative. RSI fell to extend gains, is at 50, is at 49 again, okay? So fail to sustain a move above 50. Stochastic over here is below 18, flatten, okay, suggesting that it might be not confirmed yet. Okay, what we have, okay, so flatten, implying that there might be this latest run higher might run out of steam already. So Stochastic implied to a limited bounce. MACD is negative. RSI turning lower. We have a fresh high, however, a lower high once again. Okay, implying that there is a lot of bearish bias uh, in the very short time frame, with the asset failing to cross and to enter in the upper Bollinger Band area. So support, next immediate support, as I said earlier, and a key support level is this confluence over here of the latest down fractal and the bottom of the daily Bollinger Band area at 135, round number as well. Euro Oz, I'm gonna go for a final for any further questions because I run a bit out of steam. Euro Oz, Euro Oz, Euro Oz. Here we are. Ooh, Kiwi. Oh, sorry, that's Euro Oz. Antipodians in general are in are under a significant pressure today. Remember that I mentioned earlier in regards to I mentioned earlier that the dollar and the yen, they used to be the strongest currencies of the day, and that the Kiwi and pound are the weakest. Aussie is one of the weakest as well. So it topped Euro Aussie over here. Here we are. It topped at 144.22 earlier. So it's not a clear indication, I'm afraid, dear Myers over here. So I put this line on because they reflect the peaks of the day. So the immediate resistance level. The asset, since the European Open, it appreciated returning, actually reversing all the losses that we have seen overnight and getting back to the 144.30 highs. But the slowdown of RSI over here, the fact that Stochastic, okay, let me just show, okay, can you see that? Okay, Stochastic suggests that there is still some support. Let me use my intraday setup as well. Okay. Okay, so MACD is pretty neutral. Stochastic is at 80, flatten. RSI the same. And fast moving averages, they no longer point higher, they point to the right hand side. So there might be at the end of this latest up leg, at least as long as we don't see the asset, the candle closing above this level. So you need to wait for your candles to close, okay? So yeah, this is what I can say, my dear Sarah. Sarah, as long as you don't see a confirmed candle, so like saying confirm, I mean you need to wait for your candle to close. Okay, I'm in a 30 minutes chart. I'm not sure what you're trading, but um, in this 30 minutes chart, it looks that a pullback might follow, considering the fact that the fast moving average are pointing to the right hand side, implying that this up leg has run out of steam, and all our momentum indicators intraday have flattened, so suggesting that there is the up leg ran out of steam, as I said. So an indication that it could rally, could extend this move, it's only if it close above the 144.30 territories over here. Okay, so let's see the hourly candle. Yeah, the same. Okay, we had a full body hourly candle over here, but this one, but it remains. It failed to break the upper Bollinger, reversing lower. MACD still negative. RSI failed to move above 80. Sorry, Stochastic failed to move above 80, and it's a bit, the slope is not sharp. It's a bit, it points to the right hand side. So it's like it's done. It's over. RSI is at 50, so neutral. So that looks to be a limited bounce. And let's see the overall picture as well. It's an asset that it has seen significant losses in during the summer, so since the end of June to be more precise. So it has entered since the 29th of June. It has entered. It has entered and it has entered a down channel. Okay, let me put it on so you can see it up. So here we are. Let me just, oh, okay, perfect. So it's in a downtrend. And you see that? Okay, it's not fully. Okay, that's much better. So here we are. You see that? Failing to, so it's in a 2 months down channel. Yesterday crossed into the lower line of the channel, so in the lower territory of the channel, with MACD very, very negatively configured in the daily chart. So the overall picture remains negative, dear Sarah, if that helps you. Okay. Thanos, yeah, Kiwi. This is okay, Puma. This is Euro Aussie. Okay, Euro Australian dollar, the one that Sarah asked. Okay, this is a daily chart in a down channel. Yesterday crossed into the lower line of the channel. So yeah, 142 is the next floor for the asset in the medium term. Okay, as long, of course, it holds. Actually, let me provide precise. The next key floor is 143. A break of it could see the asset turning further to the downside to another to a resumption of this downtrend. So any correction that we have seen, any appreciation that we have seen since the beginning of July, it was just a correction of this 2 months down channel. So Kiwi 1 hour chart. Kiwi 1 hour chart. Here we are. Okay, Kiwi, I already mentioned, it's one of the weakest currencies. So fast moving average are keep pointing lower. You see, it's all about the slope, guys. Okay, sometimes, so like in euros, okay, I'm turning back to euros because I want to show you that it's everything about the slope. Can you see over here that the fast moving average are a bit dodgy, a bit narrow, a bit, they point to the right hand side, they don't point up or down, they point right. So that suggests that it's running out of steam. That is, yes, running out of steam. But if you see in Kiwi that Thanos asked, we have a sharp slope pointing southwards. Bollingers also have a similar slope extending lower. And can you see these tails, these down tails? Down, 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 MACD turn negative. Finally, RSI, sorry, RSI is over here. RSI is below 50, obviously, but it's at 38. So if I connect with the trend line, the peaks of the RSI, you can see that is descending slowly, slowly, but descending. Can you see that, guys? So this implies into an increasing selling pressure in Kiwi intraday. Okay. Next support level is down to yesterday's territory. Oh, do I have my pivots? I don't think I have pivots in this PC, but 160, not 61, 57, 55 territory is the next support level for Kiwi intraday. The daily chart, yeah. So pretty much, yes, the Monday's bottom is the next support level for Kiwi intraday. If within the week is still by the end of the week, or I mean in the next few days, tomorrow as well, or overnight, I don't know, at the top of the day, if it fails, if it actually breaks that latest bottom, so actually Monday's bottom over here, that could open the doors, guys, to July's floor. So that it's bringing into attention if we have a daily candle below 6150, that could open the doors into not 61 territory. Okay. So S&P 500 4-hour chart. Emma mentioned. 4-hour chart. Okay, let's see. A lot of dodginess. This is what I'm seeing, my dear, my dear Emma. Okay, it used to be we, as I mentioned earlier, we had a really sharp decline. Let me start with the daily chart. I want to put my channel on. Okay, so a very steep channel, bam, bam, and since then. Okay, so 4-hour chart is what you ask for. So the intraday setup will not help in this case, so I need to delete the 5 and 9 exponential moving average. This is just for very short time frame. So I want to use, okay, I have my 50. So okay, so it's like, it looks like a rounding top if you see that. Can you see that? Rounding top. But yeah, okay. Holds a follower at 4109. Bollinger's stop drifting. That's interesting. MACD flattens even though it's well below zero. RSI remains oversold. So DRM, okay, remains at the low territory of August. Okay, so the fact that it turned back to the beginning of August, so we have this rounding top. Okay, the rounding top is a bearish formation. So a bearish formation plus the fact that MACD is well below zero, is very negatively configured, okay, and this oversold RSI, actually the fact that it's below 30, keep the outlook in the 4-hour chart negative. However, this is a rounding top, but not completed yet. Okay, not completed. You see, the floor is at 4109. And actually, I'm going to make it a round number, 41. We need to see that rounding top to be completed. Okay, so we need to see, that this rounding top to be completed, we need to see a closure of a 4-hour candle below it, and decisively below it, below the 41 4110. That's, let me just be precise, that's 4110, 4113. Yeah, that's that. Yeah, that's it. Here we are. Yeah. For this rounding top to be completed, we need to see a decisive break and closure of the 4-hour candle below the 4110, and maybe a follow-up as well that it will extend lower, implying that this is a completed rounding top, a strongly bearish formation that could open the doors to the oh, that's nice. It's not only the bottom of the rounding top, it's also the 38.2 Fibonacci level. So thank you very much for bringing that up, Diarema. That's really nice. That's really nice. You, we need to see, as I said, a closure below it. That will imply to a completed bearish, complete rounding top formation, which is bearish formation, a breakout of 31.2 levels. So that could open the doors to the 40, to the 4020. So let me just put it right. We are 50%. That 50% is down to 4024. Okay, 4024 territory. And if in the future the drift persists, that could open the doors to the 4,000 territory, which is just a breath above the 6. Oh, that's just a bit below the 50% retracement level. So this is, the attention will turn to this territory over here, so 4,000 and 4,030 area, if and only if we see decisive breakout below the 4100s. Okay, and I already explained why, because this will imply to a completed rounding top formation and a breakdown of the 38.2 Fibonacci level that has been seen since 13th of July. Okay, last but not least, again, Euro Oz. I'm gonna call it the date after Euro Dollar. I'm gonna call it the date afterwards. I'm really sorry for that. So this is the hourly chart, extending losses since yesterday after the one level. Actually, euro dollar is in a parity, remains in a parity level with the next with the nearest floor at 0.99 territory. The outlook for euro dollar is not positive. Euro area is in a significant slowdown, and we could say in recession. Okay, and that is something that we have seen back in 2000. I mean, euro dollar to enter the parity level, something that we haven't seen since 2000. Okay, 22 years ago. So intraday in a negative bias, MACD is negative. So the next floor is just 25 pips lower. In the long term, still resumption of the down leg of this long term decline, resumption of it, breaking the one territory and extending losses. So yeah, overall negative intraday. Keep posting lower lows. It has found some in this 1 hour chart. Okay, you can see that it found some immediate support, but that doesn't mean that it will bounce anytime soon. It's just three consecutive doji candles. It's just a bit of a decision. So yeah, neutral to negative. That's the current bias that we can see from the technical perspective in euro dollar. It was so is don't forget the okay. Let me just. Michael is saying, was there any recent news that made yen to lose strength and euro to gain? Um, okay, first of all, it was durables. Is the post US market open? Don't forget that. Okay. So yeah, the the don't forget that the US Open is, in general, the US session is the most volatile session of the day. Okay, and Euro and sorry, um, and along with the data supported the dollar. This is pretty much it. I'm not sure whether something else happened, my dear Michael, that boosted dollar higher against yen. But yeah, that's pretty much it. Don't forget that dollar remains, regardless of this latest down leg that we've seen yesterday, overall it remains at the highest territory that has been for many years now. Okay, it's holding the gains that we have seen the whole year. Okay, so it remains for the year the strongest currency of all, the dollar. Okay, so and yen, one of the weakest. Don't forget that. Um, in regards to the diversification of central bank of Bank of Japan and Fed. Okay, but I guess you're asking intraday. I mean, now in the last few minutes or hour. Um, I'm not really seeing anything else other than the durable goods. The fact that we had the US Open just 30 minutes ago, just that. Um, I'm afraid I cannot see anything else. But remember, the dollar yen started rising since the European Open. Okay, it's not something that happened just now. It found some support and bounced higher since the for the last 4 hours now. It's not something new. Okay, I'm not sure which time frame you're trading still, but yeah, it was yeah that latest rally started 4 hours ago. Okay, and it's still on, considering the fast moving averages that they keep pointing higher. So I'm running out of steam, guys. Uh, can I? place a trade with a $5 account. Depends of the size of your trade. Depends on everything, the size that you're gonna, the size of your position, um, which asset you want to trade. Okay, so it depends. That's a very, very generic question, my dear own. Okay. So guys, I'm running out of steam. I'm gonna call it day. Thank you very much for joining us. We're gonna have another live analysis tomorrow at the same time, or in all our social media, Twitter, LinkedIn, YouTube, and Facebook. So join us if you have any further questions. Thank you very much. Take care and have a great day ahead. Bye bye.